Let's talk about Jupiter Life Hospitals. The average occupancy increased to about 67% in this quarter. The results were good. The stock is up around 4.5%. The important point, what happens from here on? Ankit Thakker, who's the CEO of Jupiter Lifeline, joins us now. Ankit, there was good performance. The occupancy increased from 62% to 67%. The inpatient volumes for the first half up almost 11%, similar as the outpatient volumes as well. And average revenue per occupied bed moved to around 57,700. So there was growth on all parameters, and that's reflecting in our overall performance as well, with the net profit increasing about 39% in the second quarter. The question is, what happens in the second half and the next year? What's the kind of occupancy that you're targeting for the full year with the average revenue per occupied bed? And similar are your targets for the next financial year as your newer hospitals start to mature?
Yes, so on the occupancy front, we just added 22 beds in this quarter, which has started getting utilized. I think in the next half, we should see a good occupancy on these new beds in Pune. After that, we have one more opportunity to increase 12 beds in Pune. That would be the end of it for brownfield expansion in Pune. In Indore, we have achieved about 60% occupancy in this quarter. And we are in the process of building 75-80 more beds, which will get commissioned in the coming quarter. So you will have a greater capacity available to get occupied in Indore in the next quarter and the next financial year. As far as the newer hospitals are concerned, Dombivli is progressing well. In calendar year 26, we should commission Dombivli as well. And the second hospital in Pune is under regulatory clearances. We believe that we should get them in, again, the next quarter. So end of the financial year, beginning of next, that project should go underway as well.
Ankit, good afternoon. Thank you for joining in. Since you mentioned Dombivli, I'd get that point out of the way before we get to more numbers. What is the kind of capex that you have incurred for the Dombivli Hospital so far? And what's the overall spend that you are planning for this hospital?
So we have spent about 125 odd crores already. We will spend another, let's say, 200, 250 more in phase one. That should be up and running in 26.
Plan on funding that?
So we have cash reserves of 300 plus crores currently, and along with that internal accruals. So that should take care of it.
Right. Your margins have been in the 23 to 25% range, Ankit, over the last few quarters. Do you maintain that? You expect to remain in that range for the second half and for the full year as well?
Yeah, I think we should be in that zip code. I think 25, give or take something, is an optimal EBITDA margin as far as we are concerned. This first half, I think we are 23 and some change. Yeah, I think that is healthy given where we are.
Right. What about, any sort of acquisition when it comes to addition in capacity? Because you did allude to a lot of brownfield expansion and some augmenting of your rooms in, existing facilities, etc. as well. If you could give us a sense of the war chest that you have right now, and if you are looking at any acquisitions and geography in particular.
Geography is easier to answer first. Western India is our focus for now. We are honestly agnostic. If we get a good acquisition opportunity, we are happy to take it. But we think that we would want to maintain discipline while we grow. So we would not want to overpay just so that, we can hasten the revenue and acquire something so that we, start operating sooner rather than later. If it makes financial sense and if the opportunity is good, we are absolutely open to acquiring as well. We did that in Indore. But if not, we are happy to wait a couple of years and build it right.
Right. And while you did allude to, increasing occupancy with the base increasing and that getting utilized, you, I think, missed the point on average revenue per occupied bed. There was an increase in the first half of this year, in the second quarter as well. What is a number that is sustainable even as you increase your, footprint?
So for Thane and Pune both, I think we are at a mature clinical operation stage. So what that means is going forward, we would expect inflation-linked growth in ARPOBs for these two units. Indore is still in its growth phase, so for the next couple of years, we could see a little more than inflation coming from Indore with maturing case mix, with more complex surgeries, etc. Yeah, that should be the blended growth guidance.
With all the capacity that you alluded to, that you have already added or you're planning to add, Ankit, say in Indore or in Pune for the second half, what does that do to your financials? How much does that contribute once it comes on stream?
So Pune, not too much more, 12 more beds. So I don't think it would have a huge meaningful impact on consolidated financials. Indore definitely will have a significant impact because 75 beds is pretty much 1/3 of what we have in Indore now. We believe that we should, achieve a good occupancy on those additional beds towards the end of the financial year. So in Indore, we should see a good contribution coming in with additional beds.
All right, final question then before we let you go. On the payer mix, one was expecting a higher payer mix coming in from insurance and insurers, and that would do well for you in your ARPOBs as well. Where does that number stand at? Where does that go to? And also, if you have any revenue coming in from international patients, where is that number headed? If you could give us a sense.
So on the payer mix, we have just about 1% from the government. Everything else is either self or managed pay. The broad split is about 55-45 now, 55 insurance and 45 out of pocket. As Indore insurance market improves going forward, we expect that number to go closer to or maybe even cross 60% of insurance contribution, which is what we are seeing in Pune. So on the payer mix, yes, insurance every year should become higher than it was the previous year. And international, we don't have too much of focus on international work. Nothing meaningful to report.
All right, Ankit, thank you so much for sparing time and joining us on the show. Wish you good luck for the second half of the year as well. The management of Jupiter Lifeline Hospitals. Take a short break. More on the markets and specific stocks on the other side. Stay tuned.